morning, everyone. I think first up, I really want to, thank the BW team, Anurag. Uh, I think we've forgotten how to be in person, meet everybody in person. Possibly this is my first such event where I can see a lot of people around and not on VC. So I think it's a great start. Hopefully we can continue this, and the pandemic is behind us. Uh, because I think as an industry and as an organization, we've been missing to interact with all of you in a large format like this, and hopefully this year is going to be slightly different. So, thank you so much, Anurag, for setting this up and your team, to get the participants together. I think when this came up, it was pretty easy. I think the topic was pretty easy, and my only attempt, I think, was to sort of give some sort of insight as NPCI, our view of what we feel has happened over the last maybe a decade on the fintech space, especially ensuring that there is more financial inclusion in the country. I think the journey continues. Like Anurag said, this is just a start point. I think we just been managed to lay out the rails of it. There's so many things yet to be done. Somebody was telling me that the digitization percentage on the payment side is still not crossed to 50%. It's still below 50%. So the amount of potential that needs to be covered up is still so high. We've just scratched the surface, if you ask me, and there's so much more to do. So I think we put across something that we felt has happened over the years. What has led to that, and what we believe should be the next 2-3 things that as an industry we may want to focus on, and as NPCI we're trying to focus on. I think these are numbers available to everybody. This again, something like I said, in the last 10 years, our ownership of accounts have grown significantly. And when I say ownership of accounts, the bank accounts have grown significantly over the last 10 years. In fact, we've crossed most of the developed world thanks to PMJDY and some of these schemes that have happened and taken shape. Also, the difference between the rich owning the accounts, the poor owning the accounts, I think if you look at the top and the bottom, that differentiation is gone. So no one today you would come across who says, I don't have a bank account, I don't know how to use UPI, or I don't know how to use a card. I think everybody has that access. This has become democratized. I remember 20 years ago when very few people used to have a debit card or a credit card, and they could flash it out saying, I can go to an ATM and withdraw cash. So I think that has changed. So that democratization has happened, please. Of course, the gender gap, very important. A lot of us miss out that part. That more importantly, it has given power to somebody who's sitting at home and they have a mobile phone at hand, so they can use it to do things that they could not do otherwise. And of course, the number of transactions, that's another story. I don't think that's any secret. Maybe all of you would have seen this. But we've tried to attempt to sort of put this as to what has really got framed in the last few years. I think the first thing started happening with Aadhaar when some kind of identity started forming up, and a large segment of our population was about to get identified. They were getting a identity created digitally. This allowed for the banking industry, for the fintech industry to start identifying them as humans, as people on ground, so they could open their bank account, they could onboard them as customers, as accounts, and something that is what we call as presence layer, or the paperless layer, that things could now happen digitally, where you could get identified and you could open accounts. I think what happened after that was mainly what maybe NPCI brought in, what we call as the cashless layer, starting with NFS, then we did AEPS, IPS, BBPS. All these systems that we brought in were riding over this, this layer of what we call as the paperless layer, where people could start then using these bank accounts, prepaid accounts, debit accounts to make payments. Because the most important part was that you could open up an account and whatever income you have, you put in that account, then you withdraw it the next day. It was so important that you build some use cases that he tries to maintain this balance in his account so that he can start using it somewhere and doesn't cash out. So I think these systems helped the consumers to ensure that they maintain their balances. They are able to use it in shops. They're able to use it to pay their bills. They're able to use it to make payments to each other as a P2P. And of course, the last 8 year has been adoption of how much they can do that. Right? There is still cash out happening in the economy, but at least it has gone down drastically, significantly, I would say, and it has helped people to maintain more money in their accounts. So I think that is the layer that has happened now, sort of forming up the curve, and we believe now the next layer on the consent side. Anurag spoke about it, ODC, the account aggregation framework, OCEN, which is on the credit side, and of course many other things, in terms of investment, insurance. I think all these will open up as consumers get to understand how they can use their accounts. They become more digitally aware. I think these platforms and these architectures will sort of shape up. Like I said, the paperless layer has helped the rapid growth of accounts. This is an Aadhaar, and of course the rise in bank-wise branches, and of course the rise in rural outlets. You can see there is sharp jump in 2018. I think these, and I spoke about it, because these accounts were formed, and the digital layer helped people to use these accounts. They could start making payments. The growth of ATM, and more importantly, the growth of micro ATMs. I think a lot of us tend to forget the importance and the value of what micro ATMs have brought to the country. Today, a lot of these, people are able to cash out, cash in. They're able to make their loan payments, bill payments using that small machine that which sits in their vicinity. Somebody goes all the way, and then they're able to make those payments. So I think the growth has been fairly stable, and this continues to grow. And I think that's a under recognized sector, and which has really been the reason why these people are now into a digital domain or a financial inclusion domain. I think one other important part we sometimes miss, and maybe this is the role of NPCI. It was not that it was only NPCI who could build these platforms, but our intent always has been to make sure that these platforms are interoperable, which means that if you hold accounts in bank A or prepaid wallet A, you could use that at a merchant B, or you can transfer to somebody in bank B or a wallet B. The interoperability ensures that you don't have to end up opening accounts in various places. I will take it back to another 20 years ago, or maybe even 10 years ago, where you could only go to the bank ATM where you held the account. So you can't go and use an ATM which is not owned by your bank. With NFS that NPCI brought in, that interoperability came in, you could go anywhere and withdraw cash. Of course, there's a limit there, but you could do that anytime. And I think we brought that in BBPS. I think Rahul is here. He will talk about it sometime in the day. We did that with IMPS. You could do P2P payments without having the person having an account in the same. He could be in any other bank. Of course, RuPay cards to make merchant payments, and now UPI to make sure that you can make these payments across both P2P and P2M. So I think the interoperability is the key aspect, where it gave people confidence that no matter who is there out, I can use some payment mode or channel to make those payments. So I think that's the important part. Another aspect I think which we tend to forget is that while the inclusion happened in the form of opening the accounts, the utilization happened in forms of digitization of payments using all these payment modes. The DBT was a third aspect where these people could fund these accounts. So a lot of these accounts were opened in the extreme rural segment of the society, where they're working on a daily basis. So there's really no money left for them to deposit. And I think the government policies, the money that they would like to pay out to certain sections of the society, the subsidies, the DBT process kind of made that happen, where money could be directly deposited in their bank account using Aadhaar, and then that became the source of funding for them, which they don't have to cash out. Before this process, it was all cash out, and there were a lot of inefficiencies in the process. But the DBT, the digitization of DBT, I would say, has brought in, and the third very important aspect, where now you have an account, you can link the account to a RuPay card or a UPI handle, and that account now has funds coming from the government or any social scheme, which allows you to then maintain funds and balances that you can use. I think this is an important sort of metric or parameter. Uh, we can see the number of PMGDF account opens is some roughly about 35-40 crores now. The number of RuPay cards issued to those accounts, so roughly about 30 crores. And look at the deposit rate in these accounts. It has gone up from roughly about 1,000 rupees to now touching about 3,000 rupees. So that's really the power. I think that's been brought in by people like you, by NPCI, by banks, to ensure that this curve goes up, and I think this will further go up with more such accounts getting open, more digitization happening, giving the confidence to people that they can maintain balances and then use it for whatever financial needs they have. And I think this brings to the last slide, and I just wanted to make that point, that now that you have accounts, you have balances, you've got means to use and make payments, what do you do next? And I think that's where the market is automatically maturing. On 2-3 use cases we believe are going to be next important in our journey of digitization. One is, of course, all of us must have seen the trend. A lot of payment organizations moving towards investment-based services or insurance-based services. I think this is super important because insurance still remains a very urban concept. And like I said, with balances in their accounts, they can now utilize those balances to make those payments. They can buy insurance, they can make some micro investments. Account aggregation platforms are going to hopefully enable that your bank could offer, or some third party could offer you insurance without you having to go to a shop or somebody reaching to you physically. There is also the Open, so for whatever reason your bank account doesn't have enough money or your wallet doesn't have money, an open framework network could allow you to get credit into that account, and then therefore you can use that for making payments or whatever needs that you have. There's of course insurance. I spoke about insurance as a use case. So how the account aggregation framework could help you to do insurance, buy insurance, micro insurance online. And then of course other use cases on ONDC, commerce and stuff like that. So I think this is the most important component. I think the next 3 years on how we set ourselves up will define what we do with this digitization that we have created in the ecosystem. And I'm hopeful that some of you, in fact most of you, will work towards building use cases on these accounts. So thank you, and that's all I had to say. Thank you.